Ira Epstein with your morning flash update for this Friday, the 15th of September, 2023, and the time 8:20 a.m. Central Time. Hey, remember, to go back, 15 years? Lehman Brothers. I think this was the day of the collapse. So how the world has changed and how fast it has all done it. I got to thinking last night as to what the markets have done. The rally in the stock market, how strong PPI came in, retail sales strong as can be. I'm not getting why people are determined to think that the Fed isn't going to go up a quarter point. I'm going to stick in that camp, all right, that I think the market's in for a surprise. I understand the mainstream, by a big amount, looks for them to sit still. But I think you have to just be ready that you could get something else happening here. Today's triple witching day. Got to be careful in the stock market, very careful. You started off much higher. You sold off about 150 points in the Dow. You're down 20 points in the S&P from the highs. Gold is getting a bounce. It's just a minor drop in the dollar is spurring on that maybe the markets overdid everything yesterday, getting under the 107 level in the euro. In the energy markets, you're due for some corrections, but the tide is set. You got up to 94.61. My goal was 95 on this rally. So as far as I'm concerned, I'm there. I've met my targets. Here's what keeps bothering me. I keep looking at the bonds, the notes. Folks, they keep adding yield. The market very quietly is going the other way as to what the traders think about the Fed going to just sit tight. Now, I am in the camp that whether it's this September, November, that the Fed wants to go into a pause mode. I'm there, I get it, I see it, and I accept it. My question is, why wait for November when you've got data that keeps getting stronger? And if we take a look at the New York Empire State Manufacturing, come on, they were looking for a negative number. Anything over zero is expansion. You just had an expansion. You came from a negative 19. We expected a minus 10. Look at that reversal. Employment index, not as high. That is what the Fed wants. And when we take a look at new orders, they're picking up. Prices received, that's the inflation scenario, so the Fed wants to attack that. When I look at prices paid, and then inventories, I want a decline. I want us to use inventory on hand. We're getting that. And look at the shipment index from a negative 12.3 to a positive. So everything there definitely picked up. In the industrial production, this too is strong. The production's double what the market expected. Utilization, 4 points higher than what the market thought. Look at this production revised for July, even stronger than the market thought there and the utilization. So I'm not in the camp with the general public, okay? It's that simple. University of Michigan, final consumer sentiment, we'll get that at 9. Now, the UAW strike did take place, and the union is playing it very coy. They prepared the market for 146,000 workers to go out, and instead, under 13,000. 3 plants hit. It's going to impact maybe 10,000 car production very quickly, but it's selective. It gives them their war chest, and what it does is each time something comes in and the union doesn't like what the big three present to them, they can hit another plant, and they can do it selectively and keep coming up till they cause enough pain to get to somewhere. There is, in my mind, zero chance the union's going to get what it's asking for. They are going to get advances. It will not be 36 to 46% pay increases. Probably the mid-20s is as good as they can hope for. And getting a 32-hour work week and paid for 40, dream on. That isn't going to happen. Might as well close the big three auto. I really mean what I'm saying. This allows Tesla and others that are non-union to survive in that environment. And surviving is what this is all about. As I said, you're sitting here with triple witching today. You've got to learn how to work with Bollinger Bands, because when you hit these outer and lower perimeter bands, what happens is magically the market runs into a brick wall. Does that mean it can't advance against the band? Yeah, but shooting up and staying over it? No, not going to happen. The way the algorithm is set up, that just isn't it. So you learn how to work with the theories of it, and once you add momentum to it, you get another play. I want to teach you how to do this. You can get more by moving up here at any point and going into our market education area. You can watch the short ad right here and learn even more than that. I'm Ira. You have a great weekend. I will see you over the weekend with our weekend edition of the Charting. Take care. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes